Well, you know, I think it was not only the downing of the aircraft which soured risk sentiment. We also had a raft of sanctions being imposed against certain companies in Russia. That also had quite a negative impact on risk sentiment in Europe. And obviously we had evidence and signs of the ground offensive by Israel into Gaza. So I think all three factors really just weighed on markets, and we saw this very dramatic rally in treasuries and a consequent or subsequent unwind in risk, particularly in equities. Look, I mean, I think these geopolitical risks are more a function of near-term concern than long-term consequence. I think absolutely the market is very much focused really on the direction provided by the Fed. At the moment, investors are not so much reacting to improving data, but reacting rather to the Fed's interpretation of improving data. In other words, the Fed's dovishness is really driving markets, I think, at a global level. And there is, I think, a degree of complacency to the extent that should employment data suddenly improve, or improve in the same way that it's been doing. You saw jobless claims last night hitting a level only seen back in the June of 2007. And if we should continue to see this sort of improving job data, and should we see PCE or personal consumption expenditure at the core level spiking higher towards the 2% level, then I do think we could well start to see some volatility re-enter the market. I think that will be accompanied by some pretty I think material corrections from the lofty highs in equity markets that we've seen over the past couple of quarters or so. So really I think it's all eyes on how long Fed Chair Yellen will remain in this dovish mode, and I think that's really the big cause for focus over the next couple of months. Well, I think relations between Russia and the West have been deteriorating, obviously, over the last couple of quarters or so. Whether or not that is going to escalate to a new level, I suspect not. And by a new level, I mean, for example, the imposition of energy embargo between Russia into the EU. I don't think that's likely. But I do think a low-level tension is likely to remain. I think that's going to start impacting investor sentiment, as we saw over the last couple of days. And clearly, this risk is beholden on both sets of leaderships, really, to kind of engage and lower the level of tension that clearly exists. So that's something that we're looking at. In and of itself, at current levels, I don't think that Russian EU and Russian and US relationships have the ability to meaningfully disrupt existing levels of investor sentiment.